peace and quiet.
Okay, guys, this one. Question number 4. Some people actually asked me questions about this one. The wordings was a problem, yes? Yeah, wordings was a problem, wasn't it? You had to.
I think I have this.
You have, Right. Question 4. Okay. Now, right, this is the term. The van was advertised. Some people ask me whether the business paid for advertising as well. Right? No. Van was advertised for 24,000. Does that make sense? No. Van was advertised for 24,000 plus GST. Right? So what does that mean?
It was like it sold for 24,000.
Yes, if there was a price tag for the van, 24,000. Yes. Right. After that, what happens? The owner bargain with the salesperson, and the van would be provided 500 worth of on-road cost for 24,200 including GST. Right. So, right. What do you mean by on-road costs? Yes, on-road cost. Are we extra? Are we going to add to the cost of the non-current asset or no? Yes. Yes. Yeah, wonderful. If you understand it, very good. So then the cost is, guys, 24,200 including GST. Yes. Then what do? Yeah, you divide by 110 times by 100. Or otherwise, effectively, you are dividing it by 1.1. Then you are getting 22,000. For that one, right, there was another cost. What is it? Installation of heavy duty suspension, 900 plus GST. Then what do? You are adding the 900. So then your cost is going to be 22,900. Right? Right. Part B, referring to your answer to part A, explain your treatment of the heavy duty suspension and insurance. Yep. What do we do with the heavy duty suspension? Yep. Sorry? Considered as a part of the vehicle cost, yes. So why is that?
And it's like in the condition of getting the vehicle ready for the
Yes, yes, and also it will increase the economic benefit of the asset, yes, right? So future economic benefits would be increased, so that we are going to add the 900 to the cost. Take it down. The next one is, guys, insurance. What is insurance? Insurance. Yep. Is not included in the cost of van. Why is that?
Okay.
Yes, it's reoccurring, and also it basically provides economic benefits only for the next 12 months. Yes, and also on the other hand, this is an expense that actually uses the economic benefit rather than it providing, right? Okay, guys. Part C. Record the receipt of the loan and the cash purchase of the van in the general journal. Narration not required. Right? What's the double entry? Firstly, we are receiving the loan. When was that? 31st of October. Bank debit 25,000. Again, October 31st. At delivery van. We are debiting 22,900 and prepaid insurance expense 4,800. GST clearing for the addition of these two, and then altogether credited to the bank 30,470. Right. Okay, referring to one assumption, why can't we treat the entire cost of the van as an expense in the year ended 30th June? Yep. Why is that?
Because we haven't consumed it yet.
Yeah. We haven't.
Consumed it.
We haven't consumed it yet. Why not? Why not?
1 year if not
6 months? Yeah, only part of the cost of the van has been incurred, yes. Which is the what? Which is what do you call it? Just depreciation, yes. Depreciation expenses. Right. So part of the cost of the non-current asset that was consumed during the given period is the depreciation expense. So only that part will be treated as an expense rather than the entire cost. Because the entire cost of the van would be consumed or incurred during the full life of the van. Yes?
which assumption
Yeah, what do you think? What assumption can we take?
you
Yeah, period assumption, right? Yep. Yep. Okay, guys, part E. Calculate the depreciation for the year ended 30th June, straight line method. Right. So what's our formula for annual depreciation?
struggle cost
Yep.
in this first year value.
Historical cost, take away residual value for life. Right. So historical cost is 2,900, and then residual value 4,900 divided by 5. Yep. So we are getting 18,000 divided by 5, which is 3,600. And then for how many months? 6 months? No, 8 tests. $2,400. Right. Okay, guys. Then part G is referring to at least two characteristics. Discuss the ethical considerations in reporting for depreciation. Right. So this one we have done. What are the characteristics, guys? Verifiability and faithful. Yep. Yep. Relevance. We can relate to 3 if you want. Last question. Right. July 25, the delivery driver fell ill. So van was not used for deliveries for 2 months. Explain why, explain whether the van should be depreciated for those 2 months. What do you think? Should we depreciate? Why?
Because even though it wasn't, it's still, it still loses value over time.
Hmm? But the van was not used, yes? Why? What do you think? Anything else? You're halfway through, correct? What else?
Even though it wasn't used, like the parts of it.
Parts will run down, will be used away.
Maybe like kind of low.
Okay. Worn out. Right. What else? What else? No.
So because depreciation is based on time.
Don't close it. Don't close. Open it. Yeah. Depreciation is?
It's based on the time, the non-current asset is being,
Yes. Yes.
not like the usage of it.
Not by the usage. So how do we know that? Not based on the use, but by what formula? What is that? Formula for what? Yes. What is that formula for? The straight line depreciation. Correct. Very good. Right? So that's not by the use, yes, based on the time. Why? Because what did we do? We allocated the straight line depreciation method. So regardless whether of using it or not, we have to depreciate it, use it away during the life. Yes, very good. Right.
What's that word of the residual?
Well, residual value. Okay, guys. If you are done with this, please try the next question. However, there's a small adjustment there. This predicted scrap value for the van 2 treat as 11,500. This one is not 400, treat it as 11,500. Yeah. I mean, still we can do with 11,400, but there are decimals. That's the problem. So there are 3 vehicles here, guys, right? Vehicle 1, 2, and third one is here. So some typing issue should have been in new sentence, and this is number 4.
Vehicle 4 also has decimal.
Sorry?
Vehicle 4 also has decimal.
Yeah, that's one also counts in this one. Don't worry about it. Other one was take it. 25. No, 25 is not 64. Is it the depreciation? This one is depreciation for 1 year. This is not 20, the 64. It's wrong. Ready?
Wait, the last one didn't listen.
Ah, that's fine. Yeah, that's coming, please. So, which year are these? Are these annual depreciations? Okay. What are the other ones you did? Like, two? You didn't read the number 3 with the 3? Oh, no, I didn't read it properly. Also, if you want, we can try with the double sheet there, so. Yeah. This is all, which is good. This is also good. Yeah, that's the thing. Just firstly, we have to calculate the annual, yes? Then after that, we can calculate proportionately. Okay, guys, how did you find this question? All right, easy? Right. Did you do the balance sheet? Okay, we'll see. Right? Okay. Now, first vehicle was purchased January 1st, 22, and then annual depreciation is 6,400, yes? Right, then, firstly, guys, what happens? By June 30th, 22, what is the depreciation? 3,200, right? Depreciation is 3,200, and then June 30th, 23, how much? 6,400. If you calculated the accumulated depreciation, it will be 9,600. All right, 9,600 accumulated depreciation as of this date. AD means accumulated depreciation, and then like that we can go June 30th, 24. Yes, will be another 6,400. So the accumulated depreciation is going to be 16,000. And then January, or you can say even December 31st, 24. What's the depreciation, guys? The 200. But remember, this one is coming. Oh, no, I'll write like this. June 30th again. For June 30th, 25 is going to be another 200.
Maybe 1 year. Oh.
Why? Half a year, yes. Right. If you wanted to calculate the depreciation, yes. I mean, accumulated, you don't need it. If you want, we can calculate until 200, but there is no depreciation for that as of that date. Why? Because what's the policy, guys, for this business?
So
Yeah, see, the policy of the business is to keep the vehicles for 3 years before selling them or trading in. Trading, I'll explain you later. But selling, technically, you are getting rid of that. When you get rid of that, you have neither its cost nor its accumulated depreciation. Nothing, it's gone. Right? You are selling it means you don't have to, keep any ashes of that. You just throw it away. Yes. Right? Okay, that's the vehicle one. Any questions? Right. Now, what I did was, now they're asking us the income statement. Yes, income statement. For this, for the income statement, guys, we need right. Shall you do the vehicle two as well? Right. For the income statement, there's a small problem, but I'll do it maybe separately. Yeah. What's the depreciation for the year ended 30th June 24 from vehicle number 1? Yes. 6,400. Yes. I'll write separately. This is vehicle 1, 6,400. Right? Then similarly, we can do it for 25. What's the depreciation, guys, for 25? Vehicle 1, 3,200. Right? And then we can do the non-current assets. The vehicles. Vehicle 1, we are getting how much is the cost? 29, yes. 29,000 plus accumulated depreciation. Right? Vehicle 1, how much? By 24, 16,000, yes. Right. 16,000. Okay. That's for the vehicle 1. Then we'll do vehicle 2. There's nothing come for the balance sheet from the vehicle 1 for 25. Right? Okay. Then vehicle 2, right? When is it purchased? February 28th, 23. Yep. Okay. Then this one has a small problem. Yes. What are the costs associated? Delivery fee. There is a delivery fee which is the 2,000 plus 1,100, and then from that we are taking away the residual value which is 11,500. Yep. Divided by 3, you are getting 7,200 per annum. This is the annual depreciation. So why I calculate annual depreciation is then you can calculate proportionately for any time period, right? Then for 23, we don't have to worry, yes? 23, if anybody wanted to calculate, June 30th, 23, yes? What's the depreciation, guys? How many months? 4 months, yes? Yeah, which is 2,400.
That's because I was going backwards.
Yep. So 7,200 divided by 3, yes? Basically divided by 12 times by 4, yes? 1/3. 2,400. Right? Right? So then if we wanted, but we don't have to worry about 23. However, June 30th, 24. What's the depreciation? 7,200, yes. And then accumulated is going to be 9,600. I don't have space. This one 9,600 accumulated depreciation. Right. Now, guys, for vehicle 2, we can write here. Vehicle 2, how much is the depreciation for 24? 7,200. And then we'll calculate for 25. Right. That's also going to be 7,200. Yes. Then the accumulated depreciation will be 16,800. Right. Then we can do for vehicle 2. Vehicle 2, how much is it, guys? 33,000 is the cost, yes. And then accumulated depreciation for vehicle 2 is how much? 9,600. Right? Right. Then for 25, vehicle 2, the depreciation is 7,200. And then 25, we are getting for the vehicle 2 depreciation. How much? 33,000. And then the depreciation, accumulated depreciation for 25 is 16,800. Yep. And then we have to get it for 26, which is how much? 4,800, yes. For June 30th, 26. There will be only how many months would this be in use? Only 8 months, yes. Why? Because we purchased it on February 28th, right? And then this is going to be sold on the February 28th technically. So meaning we are using only 8 months in the year ending June 30th, 26, right? So then guys, this one we are getting only 7,200 divided by 12 times by 8. We are getting,
Plus 33,100.
sorry,
33,100.
for what?
For vehicle two.
The cost?
Yeah.
Oh yeah, I'm sorry. 33,100, yes, not 33,000. This one should be 33,100. Because 32,000 plus 1,100. Yep.
24.
Yep. Then this one is 7,200 divided by 12 times by 8. We are getting 4,800. Right? So that's going to be the depreciation for this year, June this year, which is 4,800. Vehicle 2. 4,800. Any questions up to now? We are done with 2 vehicles.
Pay for more.
Huh?
Or to pay for more vehicle.
2 more.
Or to pay for another vehicle.
Right? Sorry, this one I couldn't write. This is the, yeah, this is the, what is it? Depreciation expense of vehicles.
So you have to measurement expense on the.
Yes. Depreciation, usually we have write depreciation expense. If you look at the ledger accounts, what we did, see, yeah. Hold on, guys. Did we miss something for previous question? It was blank.
Appreciation.
No, we missed the F. We missed the F.
We miss FS.
Yeah.
Record. This one we haven't done. Question number 4, part F. Right? 30th June 25. Depreciation. How much is it? 2,400. Okay, this one is 2,400. What's the double entry, guys? What is the date? June 30th, 25. Depreciation expense of delivery van. $2,400, you debit and you credit the accumulated depreciation of delivery van. Right? Right. Do we need the narration? Yes. So expense for delivery van as of when? June 30th. June 30th, 25. Was there a memo? No, there was no memo, yes? Right. Okay, guys. Right. Next one. Okay, are you done with this one? I'm going to rub the workings for vehicle 1 and 2. Done? Okay. Then we are going to have vehicle 3, 4. Right. These were purchased when vehicle 3, September 1st is September 1st, 24. Huh? Yep. 36,400. Right. Including 12 months insurance, you take away 600. And then also you are taking away 4 years. Also you are adding. What do you do with the 1200, guys? Yes. What do you do with this 1200? You add it. Why do we add it? One time. Yes. Yes, very good. We have incurred it to bring it to into a condition and location ready for sale. Right. So then you're adding it. 1200. And then what else? And we are adding one more thing. What is it? Security system. What do you do with the security system? Security system. Yeah. 1460. What do we do? Add it. Yep. Because it is increasing the future economic benefits. Yes. Right. Then this is going to be our cost, which is equal to 37,980. Yep. From this one, we subtract the residual value, which is 19,200, and then divide by 3 years, which I'm getting 6,260 per annum. Annual depreciation is 6,260. Okay. Right. Then June 30th, 25. How much is the depreciation, guys? Yes. How many months?
Months.
10 months. Yes. 6,260 divided by 12 times by 10, which is 5,217. Right. Then June 30th, 26. It will be 6,260. So when we add them together, accumulated depreciation, I'm getting 11,477 is the accumulated depreciation as of June 30th, 26. Okay. Right. Then do we have to add it for 25? Yes. So vehicle 3 is going to be 5217. Yeah. 5217. And then vehicle 3, 4, 26 is going to be 6260. And then we can add them for the 25 balance sheet. Vehicle 3 here. Sorry, here, vehicle 3, how much? 37,980. And then accumulated is 5217. And for the last year, year 4, sorry, year 3, which is vehicle 3 here, 37,980. Vehicle 3 here, 11,477, the accumulated. Okay. Right. Then that's all for the vehicle number 3, guys. Vehicle number 4, second hand, 16,000. The date is when? 31st Jan. 25, 16,000. Right. Do we add any? Do we add this annual registration cost? No, it's reoccurring. And then life has expired. Sorry, when useful life has expired, it's 8,400. So then residual value is 8,400 divided by 3. Right. So annually, how much is it, guys? 2,533 per annum. Right. Then June, June 30th, 25. How much is it? 2,533 divided by 12 times by 5 years. 1,056. And then June 30th, 26 is going to be the full depreciation, 2,533. And then we can get the accumulated 9, 8, 3,589. Right? Then the vehicle 4 is, yeah, we have 25 as well. 25, we have all the vehicles, yes? V4, I'll write it here. V4 1056, and then here V4 2533. And then for 25, I don't have space. Vehicle 4 cost is going to be how much? 16,000. 16,000. And then vehicle 4 here, 1,056. And then vehicle 4 here, again 16,000. And then accumulated depreciation is 3,589. Okay, guys, technically we can't write like this. We have to add them, right? The values we have to add. You want me to add it? Yeah, so I'll write it in red, all of them. Technically, yeah, this one we are getting 13,600. This one 425. 16,673, and this one 39 13,593. Yeah, 424, 62,000 is on 25,600.
6100.
Oh yeah, this is Z3100. Yes, Z3100. 62,100.
So. It's in 26, 4,193.
12,993 for which one? The total? Yep.
Sorry.
Okay. Then 25,600. Yes. Then I don't have space for the 25. So you had to add all three of them for the vehicles and accumulate depreciation separately. I can do 26, 980, 353, 980. This one 6, 1566. Right. Anybody who got everything correct? This one?
How did you get the 5-2 on some?
Which one? 5-2. Which one?
Vehicle 3.
Vehicle 3. This one?
Yeah.
Yeah, that's for how many months was it?
Some
10 months. For the year ending June 30th, 25. Because why? They had purchased it September 1st, previous year. So then 10 months. 521. So yeah, everything. Anybody who got everything correct? Of course. Even this is the first time I did this question. Right? Yeah, because last year for 3-4 I didn't include this question. Right? So even first
So
time.
where's the, sir, I have a question, where's the real textbook?
Real textbook?
Yeah.
Yes, in there.
No, I'm saying, look at the cover.
Yeah.
The real textbook.
Yeah, there are 2 textbooks in there, not one. Yeah. Remember? You were not there. Remember, I had told you, yeah, I'm reading 2 textbooks because there are 2 textbooks in Victoria for accounting
Cambridge.
and
no.
Macmillan.
I think I'm using Cambridge. I think I showed you the other day when you went through the Anthony question.
Yeah, most of the schools use Cambridge.
Because I think I remember misplacing one of the sheets that you gave me, so I brought in the 10th book, because that book had the same question.
Okay, guys, now you have to practice. Okay? You have to practice. What you don't do usually is
Oh
you have to
dear.
practice.
Ah.
At least how many times?
3 times.
Yeah? At least, yes. 3 times you have to do.
What's
I have done, when I was at your level, I have done 5 times. Every question.
if you did more times, then how come we get less times to do?
Yeah, you have. That's why I said at least. At least. Okay, guys? Yeah. Any questions?
Wait, what are the balance sheet values for 2025?
25 I didn't add because I didn't have space to write. So you have to add vehicle 234 for the cost and vehicle 234 for the accumulated depreciation. Okay, guys. Right now we can start the reducing balance method.
I don't know, reducing the with.
Right.
Alright, so what are the questions? So,
Right. Now, reduce imbalance method, you haven't done in unit 2. So you are doing it for the first time. So from the beginning, guys, please listen attentively. Right. So otherwise, your knowledge also will be affected by the reduce imbalance. Yes, reduce imbalance method. Right. If you have done general maths, you know what I'm talking about. So you have the reduce imbalance method in general maths. Yes. Right. Okay. Let's do the note firstly.
Is the next you profit and loss disposal.
Sorry. Yes. Yes. Next two.
Execute.
Yeah.
Did you write continuous?
Contribute. Which one? Contributes more.
Which there's no residual value.
There is residual value. There is a kind of weird formula to calculate it. In the textbook, it is there, but you don't have to worry about it. It's not exam. Yeah. Right. So formula for calculating depreciation expense.
It's like positive.
Okay, guys, you can read it. I'll give you 1 minute.
Increasing. Presidency. Is huge. So it's not huge.
Okay, guys. Yeah. What is reduce imbalance method? Right. Now, when we calculate the annual depreciation under the straight line method, we were meant to calculate the depreciation rate using that formula, yes. Historical cost take rate, residual value divided by the life in years. Then in this one, guys, you don't have to calculate the depreciation rate because on the reduce imbalance method, you will be always given the rate, right? What you have to do is you have to apply the rate on the carrying value actually to calculate the depreciation. Because under the reduce imbalance method, we calculate the depreciation on the carrying value. Now, what is carrying value?
Value count.
Yeah, how do we find it? How do we calculate it? Carrying value.
Circle cost applied to
Historical cost applied to less years. Historical take away, historical cost take away, accumulated depreciation is the carrying value. Remember the carrying value I gave you definition, yes, last week. Plus residual value. The value of the non-current asset that is yet to be consumed in the rest of the life of its asset plus residual value. Because why residual value we can't depreciate. Okay. Then guys, yeah. So carrying value is going to always what will happen? Carrying value, what do you think? As the asset ages, as the time lapses, what do you think will happen to the carrying value? Increase or decrease or stays the same? Carrying value decreases, yes. Meaning, if you are calculating any amount on the carrying value which has a habit of decreasing, what do you think will happen to that value we calculate on the carrying value? Also decreases. So that depreciation expense under the RBM is ever decreased. We can do it forever.
It's going to be exponential.
Yes, exponential. This I'll show you.
So
The graph. Yes. Correct?
You can't do differentials.
the asymptotic residual.
Yeah, so like imagine a line with the x value.
Yeah, that's an exponential. Correct. So basically, why? There will be a value forever. Right? There will be decimal, infinity value. So that, but however, in accounting, still we limit it, right? So if it is like 5 years, 10 years, still we limit it. We are not going to do like maths, we are explaining in maths. But in accounting, yeah, we will stop.
1 cent.
Yeah, we will stop. Right? So the thing is, guys, the interesting thing, beauty is regardless of the depreciation method we pick, whether we pick the straight line method or reduce imbalance method, the overall result of both the method will be the same. What do you mean by overall result? The historical cost is anyway the same. Carrying value at the end, carrying value or the residual value at the end of the life will be same. Total depreciation. Remember, we calculated the total depreciation on straight line method. How? How do we get the total depreciation? Or total depreciable value?
Cost.
Yes, historical cost take away residual value is what we can depreciate totally, regardless in that life. So that total depreciation expense or total accumulated depreciation, whatever you say, will be the same on both units. So overall result at the end will be the same.
So what's the time?
Time is 6:05. Yeah, we'll do this example and then I'll give you a break. Or do you need a break now?
So it's
Okay. So van was purchased at 20,000 on 1st of January 25 and is depreciated 25% per annum using reducing balance method, right? So I'll show you the calculation of the depreciation. Okay, like this we can continue.
I'm actually you cannot to reach. Hi. Australia. I think I'm fine between from. Should we capture? You capture it.
You know what happened? When we captured. I tell you what, last time. They received the shape around.
But
Oh, I mean, they also still taking respect. Just second time. This is not your mom.
it's like has your program.
No. In a box. No. That could fucking no one is going to find it.
You know the map.
We did need that.
That's a camping percent for years.
You had him
So
for
now I'm sorry because of what it can be. We didn't work it into very much.
I put the word one.
Yeah, there's no way for us to keep.
No, you don't allow. Just. I jump when each other self.
Absolutely. But it sucks. Not because I don't even know that I know for you. Some use.
Like one thing else.
Yeah.
It's fine. And so if you look at page 13, and you like I think,
But being in the
no,
machine.
yes, but it's coming from customer value.
Like equipment. But like I was able to draw your air balance to the possible. That like. Oh,
Right, he didn't complete having. This time.
I'm just grateful. I was doing the children. You got to push off your. Okay, I don't know. You can follow. Zero follow.
Yes, you just got so fast. Like, the concept. It was like, catches it. So we can further.
But what premises? Which everything are you got? Wait, yeah,
What is it?
premises. Which one?
What do you think?
Let me, straight.
Still. What's the double entry for the depreciation on the reducing balance letter? Same? Yeah. Same? Yes, same. It's just the calculating method is. There are many methods actually, but in study design, there are two.
The like having it on the top.
Yeah, unit cost method.
So we do.
Wait, no, not cost holding.
Can't believe when this went there. I had to yell at someone because they were like holding the handle while I was trying to open it.
Yeah, I really like this one.
Oh dear, dearie me.
Okay, guys, before I forget, next week, bring
Laptop.
Laptops, yes. Right.
Or it's not failing.
Yeah, leave it. Just leave it like that, yeah.
Maybe this marks.
Okay, guys, right,
Okay.
now, right, so what's the difference between these two methods, reduce imbalance method and straight line method, right? So,
Exponential.
yeah, what's the assumption? Assumption is that the straight line method assumes the asset is used
Even.
or consumed evenly throughout its useful life, right? Whichever the year we take, first year, second year, half year, it's the same,
So
right? Yeah, it's the same, right? So then, as a result, based on that revenue and based on the way that we use, right? So we will allocate the depreciation accordingly. So if we are going to use it evenly, then our depreciation expense also will be even. So basically, the depreciation method will reflect the way we use the particular asset, right? Some assets we might not use evenly like that, right? For example, furniture, right? So fittings, premises, building, right? We will be using evenly, yes. But there will be some assets, right? That we are using more towards its early part of the life than it ages, right? So as it ages, we will be using less based on the nature of some assets like machinery, you know, computers, plants, plant means like big machines, not the trees, right? Right? Big plants, big machines are called plants. So then both those ones, vans, right? So we are going to use in that way. So which way we would use more at the early part of its life and then less as it ages. As a result, the depreciation expense also should be reflecting the same thing, what we call as revenue earning pattern. So whenever you get a question in terms of selecting the depreciation method, the examiner is looking for just one thing, usually, right? What is it? That phrase, right? Revenue earning pattern or revenue generating pattern, whichever it is, right? That's what the examination. So you must include. That's why I have written in red, right? Very important. Revenue earning pattern should be there, right? So basically, guys, as I told you, we will, overall picture, regardless of the method we depreciate, it will be the same at the end of its life. Okay. Right. So why do we want to do that? Why do we like depreciate more or less, right? Or why do we depreciate the same amount throughout the life? Right? Why do we do that? Yes, basically to match the revenue earning. Yes, so we will depreciate more if the particular asset is going to generate more revenue in its early part of the life, and then less as it ages. So then probably the contribution by a van or a machine is very high at the beginning. So then it contributes quite a lot for our revenue. So then we have to depreciate also more. Why? Because to follow or comply with the period assumption or accrual basis assumption. Why? The revenues earned and expenses incurred should be matched against each other, right? So they should be compatible. So then that's why we are basically following two methods, right? Based on their revenue earning pattern. Technically, that's it for the theory, guys, but we have write this one. And the double entry for depreciation, regardless of the depreciation method, it's the same. Double entry is the same. Depreciating calculating method is different, but depreciation, recording the double entry ledger accounts, they are the same. Okay, right. You want to try this one? Theory question, I'll give you the answer. You don't have to worry. You can do the rest.
Yeah. I don't get part C, where it says. Year ended 25 and 26, and only.
What is it?
So code appreciation last year ended 30, June 2025 and 26.
Yeah, for 2 years.
In one.
In one, sorry?
In one.
No, separately. Ah, yes, one line is missing. Yes, you should have 4. Narration? Yeah, don't worry about the narration then. Yeah, sorry guys, part C, one line missing, and don't worry about the narration. Okay, because you are okay with the narration, yes? Yeah. One line missing. There are only 3, there should have been 4.
Sir, can you go up? What's that? What?
Which one?
Oh, assured, not accrued, right?
Yeah,
Assured.
assumed.
Huh?
Assumed.
Ah. I thought it was assured.
Depreciation accounts cost of accumulation. Interesting.
Done?
Yeah.
Part B? No?
Yeah, I asked you to do part, I asked you to not to worry about part A, I asked you to do the list. That's knowledge and part A, yes.
I first ask.
Okay, perfect close. In between.
Yeah, I have never told this one, I've told that,
Yeah.
this one, this method.
What?
Oh, I have never told that one. This one, have I ever told you like this? Back to back in years? No, that's your school method. Yes, the school is doing that. Okay. What you can say now? Yeah, you have to balance it, I mean. Yeah, like that. And then, yeah.
That's why she.
In a sound. I don't want to be honest. No, we'll do it separate. This one has one line of signature.
Oh,
There should have been 4 lines. What is this? Where? Is that the double entry I told you? Oh, who told you that double entry?
Probably his school.
Huh?
wow.
What's the double entry?
That depreciation expense.
This one is.
Probably his school taught him that.
Yeah.
Credit the
What school does my guy go?
Okay, what's the double entry for depreciation? Shouting.
okay. Yo, what school is my guy go to?
Because he probably left it to school.
Both of you are in the same school?
No, I'm not good at school.
But I go to school with his friends.
No, I asked you a question.
Yeah. Historical cost minus residual value of a life. That's it, isn't it? The depreciation.
It's the double entry.
Ah. The accrued depreciation, isn't that?
Yeah, what is it?
It's a bit depreciation credit one card.
Accrued depreciation. Is that what I told you? Yeah, all of the time. Yeah, what's the double entry for depreciation?
The depreciation expense. Credit.
I
Of your payments are, no? What? Qualified accountant there? Is that the double entry or?
And my father is also a qualified accountant. And
Okay.
and my father is also a qualified accountant.
Actually, I'll find that.
Why don't you do that one?
This one will be.
What's the double entry for depreciation?
Accumulated depreciation.
Hold on. Your time is gone. I think interest. You created so simply from the legend. Yes, I know.
Over the years.
Yes, what is debit perspectives? Depreciation expected?
What do you write for? See?
Yes, for now, I do remember. The double entry for depreciation. How about it? Yes, good, and what's the double entry for depreciation?
Depreciation expense.
And
You credit accumulated depreciation.
I listen.
Yeah, yeah, clear.
Yes. Next question.
Yeah.
Yeah, application, credit.
Yes. Why? You debit the depreciation and credit the accumulated. Why? What here?
It's
It's a negative asset.
So, here's a question. You know, it's like two different years, but it's like 2025 and 2026.
Yeah, separate.
So what happened with the year as well?
Yeah, this one is 25, one is 26, yeah. Right. Yeah, how did you go with the calculation?
What is the accumulated depreciation?
Yeah, it's a negative asset.
And this.
It's a opposite. Depreciation is depreciation, what is this? Of machinery, that's an expense. Right? This is an expense account, this is this is a negative amount. Sorry, negative asset.
Yeah.
Because of the calculation. Right. Okay, guys.
Did you try to send one for the other?
Yeah. I do yet.
Oh, man. Oh, man. So how did you be? Let me go on my house.
I'll show you. Look, the
Nine, one to eight. One to eight, or one or four, whole wide.
Sorry, sir.
Right, the way I mean. Right, so that's five minutes. It's cool. Three.
Okay, yeah. Most of you have done the calculations. Yeah, what's the double end? What's the depreciation expense for the first year, guys?
0.2 times 33,000.
Yep.
Before 100.
Yep. So 30th June 30th, 25. Right? We have to use the carrying value. Carrying value is how much? For the first year, there is no any depreciation, so it is just 2,000 times by 20%, right? 6,400. Then next one, June 30th, 26, yes. What's the carrying value? 2,000. Yes. How do we get the carrying value? Minus 6,400. So historical cost takeaway accumulated is the carrying value, which is 25,600. Yes. Times by 20%, giving you 5,120. Right. So those are the two values, guys, for the 2 years. So double entry, June June 30th, 25. You debit the depreciation expense of, what is it, van? This van, yes. 6,400, and you credit, sorry, is it delivery? No, it's on van, see? Yeah, you basically use the ledger accounts name. Then you credit the accumulated depreciation of van 6,400. Then same thing, guys, for the next year, June 30th, 26. You debit the depreciation, or shorten it, expense of van 5,120, and then accumulated depreciation of van 5,120. Right now, I'm happy that some of you have had invented new methods in recording the ledger account. Right? Yeah, I appreciate your creativity, but unfortunately, you don't get marks for creativity in accounting. Okay. Yep. Okay. Now, right. What's the first entry here, guys? June 30th, 25. Coming from the accumulated. In the ledger account, you can shorten the ledger account names. 6,400. Then how do you close this one? How do you close? Can you close it like this? No, that's wrong. No, you can't. You can't. Some people say yes. Is that how you do at school? Yeah, I know, because some schools they do it, right? Yeah. The schools, your teachers were actually teaching. That's wrong. Okay. Yeah. Okay. Sorry.
My teacher
Wrong.
my teacher said that for one of them, like I had to put it at the start. And it was like with revenue and expense. And we were just footing it. Like
You are footing.
we weren't supposed to, like, I did balance it and
Yeah.
he said it was wrong. I wasn't supposed to balance it.
Okay. So in the question, what did it ask you to do?
Balance all of the journals. But
The-
you weren't supposed to balance the revenue and expense. If you only.
Okay, revenue and expenses, we are not balancing. That's correct. Have we balanced the revenues and expenses? No. What did we do? Did you transfer it to the P&L summary?
No.
That's the thing. That's why your teacher may have mentioned. Is that the what? No?
But we haven't done the.
You haven't done the P&L summary, but still you balance the expenses and revenues for the next period. That's wrong. I mean, your teacher, if your teacher hasn't taught you and asking you it is wrong, then teacher is wrong because teacher can't say, because you haven't learned it. So you don't know.
What the expense.
Yes, transfer to the P&L summary.
Whatever you don't usually do.
Yeah, footing, that's why I asked you. Like, if the question is asking you to balance, then you can't foot. And then, however, it is not wrong. Let's say the footing, they never ask in the exam. Homework could be probably the last. Yeah, we'll do 2, 3, probably 4 and 5 would be homework. 5 you can do anyway for homework. You can try. Otherwise, yeah, you can maybe you can try for 4, right? Yeah. Yeah. So can you show me the question, Sanya? Then I can tell you.
It was just, we were posting it into the revenue accounts.
Yeah.
And there was like monthly transactions and then I balanced all of my assets and liabilities.
And revenues, expenses, everything.
I balanced everything.
You were meant to do the trial balance?
No.
No. Okay. Because in the exam, guys, remember, you will never be asked to foot. You don't have to foot. Foot is actually not in your study design now. It was 2 study designs before. Your school does?
No.
Footing, remember I showed you footing, yes? I showed you once footing. When we were doing the ledger account, footing means informal method of balancing a ledger account. Right? If you want, I'll show you, but footing, we don't practice. Okay, footing was like 2 study designs ago. It stopped around 2018. I don't know, because that's kind of gone. Did we have in the new one, did you have the footing? No.
But teacher said like it's not really,
It's not what?
it's not really gonna come.
Yeah, it's not coming to here. Definitely, you don't have to worry about footing. Even though when it was there in the study design, it never came to the exam.
So I just drew a balance ledger basically. I just gave it as it is and then just transferred it to the payments.
Yeah, for expenses and revenues, you have to transfer to the P&L summary for sure. Explicitly for the expense account, I'll show you. You have forgotten. Yeah, remember the tude number 13, yes? We did the transferring entries. Yeah. So then what do we do, guys, here? Yeah, how do we balance this? Or how do we close it? 6,400. Then you repeat the same total and then you write here 6,400 for the last day of the period, which is our balance day. P&L summary. You transfer it to P&L summary. That's it. That's all. Yeah. Sorry, any question? All right. Then what do we do for the next period? Same thing. June 30th, 26. It's coming from accumulated depreciation. Expense of van 5120. Then matter of closing it. Okay, guys, how do we do the accumulated depreciation? June 30th, 25, coming from the depreciation expense of van, 6,400. Now this one we are going to balance. Why? Because this is a negative asset, yes? Right. This one we are balancing. July 1st, 25, balance. Okay. Then what do we do? Again, June 30th, 26, coming from the depreciation expense, van 5120, then we are going to balance it. 11,520, 11,520, then June 30th, 26, yep, balance 11,520, and then July 1st, 26, balance, opening balance 11,520. Okay. Right. Then what do we do for the van? This is not expense, guys. This is an asset. When I right. What do we do for the van? When did we purchase it? The purchase, yes, yeah. 1st July 24. So July 1st, 24 they purchase from bank 32,000, yes. Now again you are balancing June 30th, 25, balance 32,000, and then July 1st, 25, balance 32,000. Again, it's a matter of balancing. June 30th, 26. Then opening balance for July 1st, 26. Same. Like that, it will go forever until it is sold. Right. You invented a new method for that, Tyser? Same thing.
Schools. Single entry. If I brought school stuff here, what would you do? If I brought whatever I wrote in the what would you do?
Okay, now balance sheet extracts, guys. Right? What's the balance sheet extract for 30 June 25? Van, you can write less or minus sign, accumulated depreciation expense, or depreciation actually of van. For accumulated depreciation, usually we don't say expense. Right, van, how much? 32K and 6,400, and then 25,600. Then next one, for the next year, guys, van, how much? 32,000 again, less accumulated depreciation of van. How much? 11. The balance we are getting here, 11,520, yes. 20,480 is the, yeah. What do we call this 2480, guys? Carrying value, yes. This is the carrying value. This is the carrying value.
No.
Yeah, you can try question 2.
Is this what Usain Bolt did after retiring? Now he's no longer a runner, now sells nuts and bolts.
Yes.
But if the van, if it becomes collateral, you repay a loan, can it become a liability?
What do you mean by collateral?
No, the loans are like, give you a loan, you have collateral like a house or like,
Collateral means like you are trading it.
It's like an asset, it's like an asset that you say, if I do not pay back, you will sell this like that.
Ah, okay. So you take a loan for the van, but you don't pay it.
No,
No.
you take a loan in like, as like, say you like pawn gold, but
Mhm.
like a gold loan.
Yep.
So you give the loan to them, so they give you money in return, but.
Okay, you give the loan.
So if you
So
don't.
you are selling the loan. Is that what you're asking? Then
I don't know, it's quite simple.
I didn't get your question.
So if you like get loan,
Mhm.
but instead of being a liability.
Yep.
You said collateral, so you van 10,000, they give you 10,000.
Yep.
So in that case, the van would be a liability because it's not yours.
Yep.
So it'd be a liability because the bank owns to take.
Okay. Now, in accounting terms, it's not a liability. Why? Because van, even though it's a collateral, so collateral means like basically you are giving it for the van yes, as a security. Yeah. So van by definition for accounting is an asset. Why? Because doesn't matter, right? We call it actually substance over form. We don't learn it in your level, but next level in the uni, substance over form means we don't really worry about the legal aspect of that. Maybe it can be, it is owned by somebody or the bank or, the lender. But as long as the asset provides us economic benefits, doesn't matter who owns it, right? We have done a question, not the way you asked, similar. Remember the question we have done, like, that the owner borrows the sister's computer. And remember, you were not there at the beginning, right? When we were doing assets, the accounting elements, I have given them a question similar. So owner is basically borrowing sister's laptop or computer. Then in different circumstances, we are asking how you would identify for the business. Yeah, no, for accounting terms, yeah, practically yes. What your point is, it can be a liability because there is a kind of a burden. But for accounting, it's not. The reason is because it's providing economic benefit. Right? So you are saying like basically the liability and the asset, both of them are same value, yes? Yeah. For a moment, I thought like the value assets value has dropped below its liability. Then it is becoming a net liability. Then even it is like basically for you don't have to worry about the van, even if they come and take it, doesn't matter. Why? Because still it's worth for us. Okay, guys, you can try question 2.
Do you want to put this in? What you did the shopping?
40.
So calculate the depreciation of the truck that is due.
Yep.
Subtract from the cost.
Yes, you have to remember in reducing balance method, you have to calculate the depreciation on the carrying value. Okay.
Is it supposed to come to the symbols?
Yes, in the second year, you are going to this thing. If it is decimals, what do you do? You round it, yes. And there is a debate in the rounding. I don't know what the teachers round it up, yeah, round it forward.
I think it said if there is that, just round it down. It shouldn't be done.
You just learn this in years now.
Yeah. Like,
Is that what your teacher said?
yeah, but there shouldn't be any steps, so I think just,
Sorry?
there shouldn't be any steps, like it should be all whole numbers.
I didn't get you.
If there is like decimal, then probably a mistake.
Okay.
Yeah.
So they won't do this now.
Normal, it's anything,
Yeah.
well, maybe 200. 1 4 22. That's 1800.